How's it going, everyone? Matt here. In today's video, we're going to be covering 7 useful tips for investing during a depression. Without further ado, let's just get right into it. Tip number 1, invest in liquid assets. So unless you're able to buy a real estate property for pennies on the dollar, it's probably better to invest in mostly liquid assets because you don't know when you'll really need the cash. Especially right now with the depression going on, we don't know what's going to happen next. So it helps to have cash equivalents so you can have that peace of mind and more control of your finances. You could lose your job if you haven't already, or if you're on unemployment right now, the government may just stop sending you checks without any notice. So it's really important to have those liquid assets such as stocks and bonds so you're able to convert it to cash if you really do need it. Tip number 2, avoid investing in companies that are highly leveraged. In other words, stay away from companies with a higher amount of debt on their balance sheet. They're more prone to bankruptcy, especially during these times, and with an unsustainable debt-to-equity ratio, they're not good buys at all. Look for companies with good solvency ratios, like the debt-to-equity ratio, as well as other ratios, such as the current ratio, the quick ratio, or the debts-to-inventory ratio. All of these ratios are good to tell if a company is solvent or not, and I'll leave all of the formulas up on the screen, and as well as some information down in the description below. Tip number 3, don't try to predict the bottom. In other words, don't speculate. Of course, everyone would love to get in right when the market hits the bottom because that's, of course, when you make the most money, but it's very unlikely that you'll be able to time it perfectly, so don't try it. Chances are you'll wait too long and get in when the prices are already back up, and then you won't have made any money, or you'll spend all your money when you thought it hit the bottom and then it drops another 10-15%, and so you panic sell and lose all that money. So the best way to approach buying during this time is to not speculate, but buy in increments. Average up, average down on your position, which allows you to minimize risk and avoid speculation. For example, if I wanted to buy a stock and its price was at $32, I'd buy a little bit of it at 32. If it went down to 31, I'd buy a little bit more. 30, I'd buy a little bit more. Or if it went the other way and went up to 33, I'd buy a little bit more. 34, buy a little bit more. That way my cost is averaged, and over the long run, as long as the stock goes back up, I'll make money either way. So it's best just to average up or average down on your positions and not speculate, as this could potentially lead you to lose a lot of money. Tip number 4, don't dump all your stocks. Now this is something I've seen in a lot of YouTube videos recently from other YouTubers, is that they make videos where they talk about how they dumped all their stocks, and this is a mistake. Now for example, an extreme example, giving up your investments in say an airline stock is fine because they're not going to be making any money anytime soon, and by anytime soon I mean like 5 to 10 years is what Buffett says. So giving up stock in companies like that is fine. But if you're giving up stock in recession-proof companies such as utilities, consumer staples, or healthcare companies, you're actually hurting your portfolio because these companies are most likely to perform better than other ones. So why would you give up stock in that company? And this is what I've seen a lot of YouTubers doing. So please don't give up your stocks if they're in recession-proof companies, like we talked about consumer staples like Apple, Microsoft, utilities such as waste management, and healthcare stocks. These stocks are going to be just fine if their balance sheets are good. So tip number 5, invest in yourself. Sounds a little cheesy, but right now with the economy basically at a standstill, it's one of the perfect times to invest in your education and your skills. Things such as reading books, starting small business projects that you've maybe thought about but never really had the time to do, or taking some online classes at your local college are all great ways to take advantage of this. This is something I'm actually currently doing with making these YouTube videos even, so it really is just the perfect time to capitalize on anything that you've wanted to do that you've never really had the time to do. And investing in yourself really can never be a bad investment as long as you're learning something or improving a skill that you have. So moving on to tip number 6, consider investing in gold or silver. Normally, gold and silver are not good investments. They return much less than, say, an S&P 500 ETF, but they generally do well during recessions and depressions and recover much quicker than stocks because investors feel that they're safe. They feel that they're a safe bet compared to the market. No matter what the market does, they feel that the commodities such as gold and silver will be just fine. And right now, gold is a little bit high, but silver is at a pretty incredible price historically speaking. So definitely consider that if you don't believe in the market right now. I'll leave some information down in the description below that you can research to help you get a better idea of how to invest in gold and silver. And finally, tip number 7, stay informed. You should be looking at the news on a daily basis as things are changing constantly during this depression. Even under normal circumstances, it's important to stay updated with what's going on in the economy and the world, but right now it's even more important to do so. Things can completely change within a day. For example, if they announce a vaccine for the virus or they decide to open the borders back up, it could have a huge impact on your portfolio and you don't want to miss out on these events. Looking at an extreme example, the other week when Warren Buffett dumped all of his airline shares, that was huge, unexpected news that came out of nowhere and absolutely destroyed airline stocks. And news like that is something you should be looking out for, because if you were holding airline stocks at the time, you might have wanted to dump them after hearing what he had to say about them. So staying updated with the news and being an informed investor is very important right now when everything's constantly changing. And remember, when everyone is scared to invest, that's when you should be the most confident. And a lot of people are scared right now, so right now is the perfect opportunity to hop on some investments. I'm sure if you look back at the '08 recession, you wish you would have gotten in when it was down. Well, this provides a similar opportunity with what we're in right now, so definitely take advantage of it. So thank you guys for watching this video. Leave a comment down below if there's any tips I missed out. Leave a like on this video if you found anything useful, and subscribe for more economic, investing, finance content on this channel. See you guys in the next one. Have a good day.